What if you could trade the markets with clarity instead of chasing noise? Today on the Midday Bell, we're joined by Eric Marcus, founder of Major League Trading and a full-time trader for over 14 years. Eric reveals how he uses price action, divergences, and risk management to find real opportunities in futures, options, and earnings gaps. Before we dive in, do you trade with pure price action or do you rely on indicators? Comment below and let us know. If you ever wanted to understand how professional traders cut through distractions and focus only on what matters the most, this conversation is for you. Good morning, Eric. It's so nice to meet you. I would love to, if you could just tell our audience a little bit about who you are and like what you do, and then I'd love to just start talking about what stocks you're watching and what's happening in the market.
Yeah, absolutely. Thank you for having me on, first of all. And so for those of you that don't know who I am, my name is Eric Marcus. I'm the founder of Major League Trading, which is a trading education company. And I have two main things in which I focus on. One is levels. So for me, in order to place a trade, I want to have a level there. Like I want to know like, hey, this is a reason in which we've done something before. And looking back to the left of our screen, it'll tell us, hey, here's a level where we did something from before. And then when we get back to that point at some time in the future, it's like, okay, now what is it we're looking for to do from that same level again? So that's thing number one for me, which is just levels. And then thing number two is going to be divergences. So for me, that's taking the four indices, so the S&P, NASDAQ, Russell, and Dow, and then looking at those simply just on a 5-minute chart each day and going, hey, are all of these markets moving in favor with one another? Are we all moving at the same time in the same direction? And if you looked at the S&P and NASDAQ today and you compared that to the Russell and Dow, they're totally different, right? We're actually rallying in the Russell currently and NASDAQ's pulling back on the day, right? So that's something where it's like, okay, let me take a step back. We don't have all of these markets doing the same thing. And that's a big piece for me, is making sure that I have the market in my favor.
Okay, so you think they should all be trading the same?
Yeah.
So Russell should be rallying with the NASDAQ, and if it's doing the opposite, what does that mean?
It means there's a divergence. It means something somewhere is kind of broken. And that's a time where it can create opportunities, but there's also a time where it can be rather choppy and sideways. And I mean, obviously today's a little bit of a bad example because we got FOMC coming up tomorrow. OPEX, futures rollover. So it's kind of a crazy week in terms of news and things like that.
Right.
But yeah, that's a big thing in which I want to pay attention to each day.
Okay. So each morning, how do you start your day, and what are you looking at?
So I have a trade plan sheet that I go through, and it starts with asking how I'm feeling. Like, what is it? Did I get sleep last night? Was the baby crying? Whatever the situation is, right? So how am I feeling? That's the first thing. And then from there, it looks at what are the overall markets doing? What are those four indices doing? And then I write down, and it's something easy you can see in the pre-market too, is just what is the percentage change? So like right now, we're down 0.2% in S&Ps, 0.19% in NASDAQ, 0.5% in the Russell, and 0.28% in the Dow. So the Russell is actually weaker percentage change wise overall in the day, but currently it's putting in a green bar compared to NASDAQ putting in a red bar at the moment, right, on a 5-minute chart, right? So they're not moving together. So if that's the first thing I want to see is like, hey, are we getting a big gap up like we did today in the NASDAQ while the Russell and the Dow were basically flat? So that tells me like, hey, something's out of whack here. NASDAQ's kind of like maybe doing its own thing. Maybe it gets pulled back to meet the other markets, or the other markets play catch up. So that's the first thing, is trying to determine where the markets are and then what I think they're going to do from there.
Okay. Would it be helpful to share your screen and we can kind of look at some charts?
Yeah, we can look at some charts. So an example like from today, right? So we've got the NASDAQ, and I'll just drop this down to like a 5-minute chart, right?
Okay.
So we can see we do get this gap up this morning in NASDAQ, right?
Yeah.
We do have the futures rollover that just happened yesterday, essentially going into the end of the week here. So when we get this gap up in NASDAQ, I can see that obviously in pre-market. But when we look at something like the Russell, these charts are saying two totally different things, right? Like the NASDAQ is in a clear uptrend over the last 15, 20 days, and the Russell's going basically sideways here. Right. So there's a big difference in just what those two are saying at the moment. And that's one of the big pieces that I looked for. and going, hey, what is it that we can do from this point going forward today, right?
So what would you do? What is your thoughts on this?
So my thoughts on the day, I had a level in place here at 66.7750s for the S&Ps. And my initial thoughts were that we could pull back to try and test this level.
Mm-hmm.
And if we could do that and hold, then from there we'd be able to rally, right? And if we can get through, I call this opening print, OP, 66.85 quarters. It's just wherever we opened on the day.
Mm-hmm.
That's an important line in the sand, right? Like you could make it a very general term and just say, hey, if we're above opening print on the day, that means we're actually trending higher, right? Because we're above where the market decided to open on the day, right? And in very layman's basic terms, like if we're below it, then we're trending lower on the day, right? So my game plan was to initially take a long attempt here off of 66.7750s. If that fails, then I want to just leave it alone, right? I don't want to do anything with that. So I didn't take a position in the S&Ps. I actually ended up taking a position in the NASDAQ right in through here. It's 24,555.
Yeah.
And I scalped that out going up into 24,573s. Rebought it one more time because I thought the NASDAQ was slightly stronger. And then that one ended up trailing out. And then we've basically just been sitting on hands since then and just kind of watching this thing, consolidate and go sideways, right?
Yeah. So you're buying options or you're just buying?
Those were futures trades specifically.
Yeah.
Yeah. My game plan on individual equities today was in Oracle. So I have a level in place here at 319.21s. And I wanted to see, which we actually traded in pre-market. So if we go back to the pre-market session, you can see where, we came up, we traded it one time, we pulled back. We traded it one more time, we pulled back a little deeper. So it's like, okay, if we can get through this area, right, eventually you knock enough times and someone's going to open the door and let you in, right?
Yeah.
So that would be the thought process.
Yeah.
So I wanted to see us get up through there. Yeah. And if we could do that and we could have the markets on our side, then we've got room, up here towards 345s, right? Mm-hmm. And we couldn't do that. So there was no equity trades on the day for me either there. That was the top watch.
Yeah.
And it just didn't set up. So
and how long are these trades you're usually making?
How long are my trades?
Yeah, typically.
So typically day trades are going to be my thing. Specifically around earnings season. So I'm a big fan of gaps from earnings, like the Oracle move, for example.
Yeah.
This one just happened to be way too big to do anything with. Closing at 240 and opening at 320s is a rather large move. I think Larry Ellison made like $101 billion on this move.
Oh wow, yeah.
Which is crazy. But yeah, so that's gonna be my main focus around individual equities is earnings for day trades. And those will typically last anywhere between 15 to 20 minutes. And if you can catch something that's going to trend the whole day, then you can hold it the whole day.
Wow. And so for individual equities, how are you finding your trades? Like, are you just tracking news stories or just online sentiment?
So I do a couple different things. Number one is just stalking the earnings calendar. So you'll know,
right.
when Apple's going to release and all the big names.
Right. And just predict if it's good or bad news or.
So that's the thing. I don't necessarily care one way or another whether the news is good or bad. I just want the volatility, right? And I want the liquidity to come in. So like a name like Lulu, for example, something like that is probably not normally going to be on my list. No. But when they have earnings,
right,
they get a rather large move. And in this case, it was a pretty large gap to the downside.
Wow.
And if you were thinking, hey, this is bad news, it actually ends up rallying, 15 points off the open, right? Mm-hmm. So there was opportunity in there for a initial move just to kind of fade that gap just because it was so big, right? Okay. So I don't care one way, news, good, bad, whatever. It's all based on the chart and all based off those levels for me.
This is Lululemon? Or
yeah.
That's hilarious. I'm from Vancouver, and I'm actually wearing all Lululemon right now. It's fun.
Great. They need you to buy a couple more pieces because their stock is it's struggling at the moment.
Too expensive. So so individual equity. And what about Fed rates? I mean, so I know you said before we started recording, you usually track about 20 indices stocks. Is that what you said?
So I've got 20 individual names,
Mhm.
the big ones, right? Apple, Amazon,
Right.
Baba, Cat, Coin, things like that, right? And the main thing for me on that is I just want something that's liquid.
Mhm.
So 9 times out of 10, unless the options are super expensive, I'm going to be trading the options. If
Mhm.
the options are super expensive, then I'll look to trade the shares. But I want something that's trading, a million plus shares on a day. And Apple fits that bill of
Yeah.
trade, tons and tons of shares, right? Tesla, Meta, same type of thing. So for me, I want to be able to get in and out, more importantly, if I have to,
Right.
and not take a ton of slippage, not have any issues with that.
Do you find too, like after just tracking the same 20 stocks for however long you've been doing it, you really know the stock and you feel like it trades a certain predictable way, or is it?
Yeah. Yeah.
Yeah. Yeah.
Tesla's famous for Friday moves. Like ever since pretty much 2020,
Uh-huh.
you can go back and look at like kind of like the tail end of 2020
Yeah.
into 2021, and Tesla had some insane moves. This was pre the split, so it would have been trading like $1,100 at the time.
Yeah.
It would move like 40, $50 on a Friday, like just almost every Friday. It was predictable.
Wow. So just picking up, dollars every Friday, basically trading it.
Pretty much, or not finding an entry and then
Yeah.
crying into the weekend.
Yeah. So your advice to, like, based on the strategy that you have, your advice to anybody would be, track the same super liquid stocks that are going to be all obviously the big board, maybe the big tech ones, for example. Um, and then options can obviously, I mean, any kind of trading is pretty high risk, but how would you manage risk associated to like how you're doing this as well?
So risk is extremely important. I mean, and everybody is pretty much going to say the exact same thing, right? So for me, the way in which I do it is the entries in which I'm going to take, whether it's a daily chart. So if I'm taking a swing trade, it might come off a daily or weekly. If I'm taking an intraday trade, it might come off of a 5-minute chart. But the key thing is I'm always going to have one bar worth of risk. So let's just break this down for a quick easy example here. Let's just say we were attempting to go short. This is theoretical trade, right, on the S&P this morning.
Right.
So the range on this bar right here, this first 5-minute bar, is 57 cents. So for me, I have a constant risk dollar value that I'm willing to lose per trade. So let's say it's $100. So in this case, I could take like 80 couple shares on this trade, because if it does decide to reverse on me, then I'm going to lose my $100, right? It's a 57 cent stop. I guess I could take 150 shares, whatever the number ends up being on this, right?
Mm-hmm.
And if I lose my $100, okay, then I lose my $100. That's even,
Mm-hmm.
right? If the next trade presents itself, and let's just say it's this bar down here, and I want to go long on it, and the risk is only 24 cents, well, now I just vary my share size or my options, whatever it is, so that I'm still only risking the same number each time. So all of my trades will have the same exact risk sizing, but the number of shares or the number of contracts I take, that's going to be the thing that varies.
Yeah, interesting. It's like I feel like there's probably such a big learning curve when it comes to options for anyone new, just understanding how it all works. I mean, I've never actually traded options before. But I
What,
mean,
what are you waiting for?
yeah, I know. Yeah. I guess, yeah, this is obviously what these interviews are all about, kind of learning new strategies and what people do and finding out what works for you. I think, yeah. I mean, on your website too, you have some training videos or education videos to.
Yeah, so I do. I have a full-on mentorship,
Mhm.
which I've done it live a total of 10 times.
Oh yeah.
So I would wait between classes. I would gather a group of people. I would do a live event, all through Zoom and stuff like that. And each class was about 30 to 35 hours. So each one of the live events. Um, over the course of 12 days. So all of those recordings are available now, and we've seen some amazing student success from that.
Wow.
And the biggest thing is just screen time, right?
Yeah.
Like you're going to see the same thing kind of over and over,
Yeah.
and being able to identify that each time it comes up is just going to be a matter of repetition.
Right. It's so interesting. And what's your favorite one to really trade then? Apple or?
My favorite trade is honestly just the divergence between the indices themselves. So, for example, I have it on another screen over here, but I just take I call it a four grid. So I just have the S&P, the NASDAQ, the Russell, and the Dow.
Yeah.
And it's just a 5-minute chart of each. So, for example, like right now, if we focus on this bar right here, this 1140 bar, you can see that the S&Ps do come down. They make new lows on the day. But if we were to switch that over to like the IWM, that same 1140 bar didn't make new lows on the day. So that's kind of telling me like, hey, the Russell probably doesn't really want to go lower here. The S&P may or may not be wrong there. And if we look at the Dow, it's the same thing, right? Dow is actually making or not making new lows here at the same time that S&P was, right? So that's a big piece for me. And a lot of my trades come from that. In fact, the trade in which I took yesterday was not a divergence, but if we were to go back and take a look at yesterday's action here, you can see we come down ultimately later on the day, kind of similar time frames, right? 1150 here, the Dow comes down, makes new lows. If we take a look at the Russell here from yesterday, same time frame, doesn't come down, make those new lows, right? So that ends up marking those lows for the day. Same thing here in the Qs, right? The Qs was obviously in a good, strong uptrend, which was actually the long from yesterday that it took. And then same thing in the SPY, right? It doesn't come down at 1150 and make those new lows, right? So that was just the Dow being, oops, sorry, didn't mean to go lower, and then kind of set the bottom. And, you know, we didn't really manage to go anywhere, but we did end up setting the lows from that.
And I'm curious, like, is this a strategy you came up with on your own, or did you learn it from somebody else? Or
no, so both of the strategies in which I use, the divergence and levels, are something in which I created.
Yeah. Cool.
And Divergence has been around. I created Divergence in like 2012.
Yeah. Oh, wow.
I think it was. So 2013. I've been full time since July of 2011.
Oh, wow. And you spend, any recommendation to a trader and investor would just be obviously to probably be at your desk Monday to Friday watching all these things, especially when you have an active trade.
Yeah, I mean, so it's kind of, the market's going to move whether you're watching it or not, right? Like, so if you have a position on, sometimes you're your own worst enemy in that if you're watching it, because you could see something that really doesn't matter at that exact moment in time and decide to take yourself out of a position that, if you waited 3 more hours, ends up being phenomenal, right? So to some degree, sitting and watching while you're in a position, especially as a newer trader, can tend to make you get out of positions that you probably should let be,
right?
And just sit idly on hands and not really do anything. Patience is a really important trait to have in this space.
Yeah.
But yeah, in terms of a newer trader, that's the double-edged sword. Is you want the screen time because you want to be able to see what's moving and start to pick up on, it's like watching a movie over and over again, right? Like, you pick up different things every time, right? Even though you've seen that same scene, you pick up a little different mannerisms or something from somebody. And that's the same thing you're looking for here in the markets is, hey, how did this react like last time it did that thing, right? And that's it's like watching a movie.
So what are you going to do for the rest of the day?
The rest of the day is going to be nothing. I'm typically done by 11:30 each day. So unless I have a position on that's working, then I'm typically, stepping away from the desk about that time. I'm getting to the desk about 8:30, 8:45 each morning, doing that morning prep like we talked about.
Yeah.
Waiting for the bell, and then being patient and just waiting for the signals to occur. And then once those done and over with, or not, if I don't do anything, and then just stepping away from there and checking back in later on the day.
Amazing. Well, I don't want to take up any more of your time. It's been really interesting kind of hearing your strategy and what you do. And I really appreciate, meeting you today and you sharing your insight with everybody.
Yeah, I appreciate you having me on there.
All right. Well, have a fantastic day and good luck with all your trades. I can't wait to continue to follow you.
Thank you. I appreciate it.
Eric Marcus just showed us how levels, divergences, and pure price action can shape a trader's edge in the market. What are your biggest takeaways from this episode? Share your thoughts in the comments. We'd love to hear from you. If you found this video insightful, don't forget, like, subscribe, and share. Once again, thank you, Eric Marcus from Major League Trading. I'm Rebecca Kurzweil. This is Midday Bell, and we'll see you at the next one.